We're officially live on Facebook for the Tuesday edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me, as always, the man that I like to call GC because of his genius concepts, because he knows how to generate cash flows, and because he's a great co-host, and his name is Greg Cohen. Say hello, Greg.
Hello, everybody. Great to be with you.
And joining us on the show today, we're talking about a new subject today that I think is ever more relevant when it comes to energy independence, when it comes to our future of smart cities. And there's also some cash flow investment deals maybe that we're going to sort through here. We are with the Vice President of Corporate Development at NLR Solar, who is disrupting the solar development game out there. We got Nathan Fabrick. Welcome to the show, Nathan.
Happy to be here, guys. Thanks for having me.
Happy to have you. If you are listening to us if you're on Facebook right now, just click that link, join us live. If you're on the podcast, what are you waiting for? This is as fun as it sounds. Join us live for one of these live shows. Go to nyais.com and be part of it. Be part of what we like to call the roll call. Nathan, you ready for the roll call?
Let's go.
Let's go. You're always ready, man. All right. I got to scroll all the way up because it's busy today. John Hannon, good afternoon, all. Carl Thompson, good morning, everybody. Madison, our community manager, is in the house. Welcome, Madison. We got Nadeem Shah from the West Coast. We got the Duchess Karen Meline from the first family of the Meline clan of the Not Your Average Investor Show community. She's here representing everybody. We got Noah Rendari. He's back. Welcome back, Noah. We got Joanna in the house helping out in the chat. Welcome, Joanna. Who else we got? All right, Bill Shields. Buenas tardes, amigos. Buenas tardes, Bill
I saw
Shields.
Bill Shields yesterday at the golf tournament.
Did you guys speak in English at any moment?
Yes, we did, unfortunately. But he was rocking his Not Your Average Investor shirt with pride at the JWB golf tournament. Bill, good on you, buddy.
I love it. Lee Bishop is in the house, MVP of the Not Your Average Investor Show community. We got Hervé Francois, who hasn't been here for a minute, from New Jersey, in the house. Welcome back, Hervé. We got Robert Wiesner, past star, guest investor. Greetings from Manatee-free Marietta, Georgia. It's a little inside joke you'll find out about in a second here, Nathan. Drew Barnhill joining in here from Georgia as well. Who else? We got Ken Meline, the patriarch of the first family of the Not Your Average Investor Show. We got a long roll call today, man. This is a special one.
Love it.
You bring butts in the seats, Nathan. We got Leonard Lee. He says, hello, everyone from Mountain View. Leonard, welcome to the show. Good to have you. We got Fatima Lopez is back. Good morning, everybody. She says her screen is all black. Fatima, I don't know if that is a user error because it looks like it's working here. We got Marilyn Cotterman from Homosassa, Florida.
Home of the manatees.
That's where people swim with manatees. You're really into it today, man.
I love it. We did an Airbnb there a couple of years ago, and I got to do the mermaid tour down. Maybe it was Wiki Watchy, but somewhere down there, it's the manatees are great.
It's in the area. It's that Crystal River area, right?
Yeah,
this show is single-handedly blowing up Homosassa, Florida, by the way. I mean, I'm just going to put it out there.
We got Medj Garcia. She's back. We got Scott Perloff. Welcome back, Scott.
My boy.
Your boy.
My boy, Scott.
Your boy. And Carolyn Meline, the matriarch of the first family of the Not Your Average Investor Show, is in the house. That was a mouthful, man. Nathan, I don't know what it is. You brought the people in. They're all checking in. I think it's super fun. GC, you want to tell us, Nathan, I don't know if you know this, man, but you guys had your charity golf tournament yesterday. Give us a little update there.
Single-handedly the best day of the year, JWB, every single year. And I had the honor, we both had the honor of kind of kicking off the event. Pablo was our MC and really said some really heartfelt words about what it's like to kind of watch our team, our company, this event get put on. And I got to do the opening remarks and, just looking at the sponsors that were there, the community that was there, the team that was there, everybody in front of us, seeing the veterans who were receiving the homes. We now have kind of our own little fraternity of individuals, veterans, our military heroes here who have received homes, and they come back every single year. And I get to spend some time with them and just see how their lives are just better and better every single year. So, I went home last night and just talked to my wife about it. And I was like, man, this is really what it's all about. When we were running this morning, we were talking about how it's just that milestone. It's that check-in that I'm just so blessed to have every year, where we look and we say, man, all this good stuff that we all do as clients and, friends in the community and business relationships, we're all coming together and we're making something happen. So best day of the year. Thank you for everybody who is a part of it. If you would like to continue to be a part of it, we are always raising money for JWB Cares so that we can build more homes and donate those homes to our local military heroes. You can always go to jwbcares.org and donate at any time. And thank you again for your love and support.
5 tournaments, $450,000 raised, and 4 homes given away to veterans in need through Canines for Warriors.
Absolutely.
Very,
Just getting started.
Very cool. Nathan, I know that you're a sick tennis player. You're a golfer too?
Better tennis player than golfer, but I know how to play, right? I'll put it that way.
Yeah. You know, a guy that grows up around a country club. You
Yeah.
Well,
man, you got plenty. Yeah.
Yeah, I bet. We got a couple more people that joined us in the house. We got Jen Filson, the fairy godmother of the Not Your Average Investor Show community. And I also saw, Rosalind Riley, our regular Rosalind Riley's back.
That. Are we doing the returning Rosalind regular Riley?
I wish I was remixing Rosalind Riley. That was just me stuttering like a rookie. And Roger Voisinet, who's in the house as well, a Charlottesville, Virginia legend. Welcome back, Roger. Nathan, we're here to talk about solar land development, man. Can you give us a little bit of background on what a solar land development deal looks like from your angle, right? You are, if I get this correctly, when people have tracts of land that are available, one of the very viable options in order to keep that land in the family, cash flow it, and be able to do some good is these solar development deals. Is that kind of right? And can you tell us a little bit from your perspective on how it goes?
Yeah. I mean, it's been an interesting journey. We have a real estate brokerage focused on land. So somebody asked me 10 years ago if I thought I'd be in the solar industry. I'd tell them they're crazy. But we got into the space because basically there was a movement in the last 10 years, really. The solar farms, you may know this, but the price of solar has come down pretty steadily. And with that, it's become, almost in the money for utilities to start building more of these solar projects. And what happened about 5 years ago in certain states was that they could build these projects through private developers. So the old way of doing things is power plants were traditionally built by the utilities, nuclear, coal. And when the solar came around, the utilities were more interested in buying the power via power contracts. And so it opened up this huge real estate opportunity for private developers to come in and build their facilities. And so while solar's been important and big, it's also created this really big private market for investors and really, real estate type developers to come in and build these projects and own them. So that's where we got involved, was working on behalf of these groups that were looking for very specific parcels. And yeah, our business is basically we identify these parcels using some technology, and then we work with landowners to help them find a suitable developer to enter into a long-term lease for their property to build a solar project.
That makes sense. And so if I'm understanding this correctly, it's almost like a mini public-private partnership in the sense that utilities are partnering with private individuals to kind of hedge that risk, and then they benefit from the energy generation, and the world benefits from clean energy, right? It's kind of the deal, kind of a triple win.
Yeah, I think that's it. It's basically the utilities, their responsibilities to deliver power to the stakeholders, and how they get that power. They don't necessarily have the charter or the mandate to create that power. So by using the power lines they have to deliver the community the power, they basically are saying, look, we don't need to buy and hold, or we don't need to build and own these things anymore. We just need to get access to it through these power contracts. So I think that's fair to say. Yeah.
I'm really curious about the landowners as well. Can you talk a little bit about describe what this landowner would be thinking and what their opportunities to create income on that land would be, and then why it would make sense to go into the solar development?
Yeah, I would say a good number of our landowners are farmers, and so they're looking at, their current use for the property is usually some sort of ag, where they are maybe it's soybeans, corn, and they might get, say, on the high end and some really deeper agriculture markets like the Midwest, they might get $200 to $300 an acre for leasing that property for farming. The solar projects can support probably 3-4 times that in an annual rental payment. So, there's a strong financial component that's just very compelling on face value to lock into a long-term lease. I think the other thing that's very interesting to them usually is they don't have to sell their property. So to realize a real estate event like this, traditionally it means selling your property for some sort of development. The solar projects, the useful life of these are typically 30 to 40 years. And so they would enter into a long-term agreement and just lease these properties. And so for farmers and a lot of rural landowners that don't necessarily want to let go of their property, it's a good fit.
Gotcha. I was trying to think about, and I know hopefully we'll have a chance to get into the numbers a little bit here, but I'm trying to think about, is this an opportunity as investors to target land to then develop solar on it? Do the numbers generally make sense to do that? Or is it more of land that's just been kept in the family, almost like a better source of stable income for those who are planning on holding on to that asset long term, if that's their priority? Is that more of the ideal landowner here?
Yeah, it's usually the second. I mean, the challenge with investing in solar land is that the development process is long and it's pretty risky. And so we know that you have certain power lines that make this a potentially good site, but that work that a developer does to spend money to get the engineering done, the studies, the interconnection study with the grid, that's all very expensive. And so if I were going to go speculate and buy a piece of property, I really probably wouldn't want to buy it before I knew I could build a solar project on it. So that's part of the challenge for, say, Main Street investors jumping into the solar land investment business. It's usually a little bit of a big boys game because there's a lot of capital you have to put at risk to get a project done.
Okay, so I think we're going to be able to address that kind of capital risk in the investing scorecard. If I understand it correctly, also, Nathan, this is heavily a game of coinciding land opportunity, sun kind of like dynamics of where you live and how many sunshine days or sunshine hours there are a year, plus state or local or federal incentives that also kick in that make certain spots viable for this. Is that correct?
Perfectly put. Yes.
Okay. So right now, what are the states or what are the regions where this is attractive right now? And then I kind of want to play with the idea of if there's an opportunistic way of, if you think that there's certain kind of legislation coming down the pike, stuff like that. Yeah.
And maybe I'd start, I thought this was an interesting point is people, I think it's important to see really what's driving the development, like you said. I mean, especially, looking at Biden's infrastructure plan, it's common for most people to look at this and think that the federal government is really driving energy policy, but in effect, they're very limited on what they can do. I mean, that's more of the tax credit that's available as a federal tax credit that's offered for solar projects. But, that's a fairly blunt instrument to promote solar development. And that's about as, I would say, far as they can go. And they push it as far as they can there. A couple of the other things they're doing are to make it easier for transportation, some transmission line right-of-ways to get preference where states can't push back on stopping the development of those lines. So making it easier to protect these transmission corridors and saying, look, we can fast track development of the infrastructure and the transmission line improvements in those areas. But, the most of the solar policy is at the state level. Energy policy is almost exclusively at the state level. So for that reason, you're looking at almost by state boundaries. You can go down the list and see which states have promoted utility scale solar and which ones haven't. And by and large, by no surprise, most of the left-leaning or Democratic states are going to be the ones that have popped sooner. It almost seems a little odd because some of these states like Massachusetts and Washington State and Michigan are some of the biggest states for solar, but no sunshine. So it always kind of struck me as odd that you'd think like Florida as a sunshine state would have, the biggest solar boom and one of the first out there, but it's not as much to do with the production of the energy as it is to do with the incentives provided by the states and how they promoted solar within those boundaries. So
that makes sense. So is there kind of like strategy? Have you been around long enough to see a cycle where a state goes from not having these incentives to having these incentives and seeing what the market does, how it reacts with like, the big boy developers or even private developers trying to get in the game? Do you see that kind of like a gold rush when it happens?
We've had the opportunity to see a few of these cycles, and probably the best example of almost a fully maturing market is California. They were so early on and had so many incentives pushed against it. And I hesitate to speak too much to it because that was happening in almost the early 2000s before we got involved. So from a real estate angle, probably the most mature market since we've participated have been North Carolina and Massachusetts and New Jersey, some of these markets on the East Coast. But it is interesting to see how, I think from a real estate perspective, there was a huge supply of land back in North Carolina in 2015, where landowners were more than happy to sign up for this type of arrangement. Their best alternative was to grow crops. They could get a solar lease. They could get the 3 times the revenue. It was very easy to see. I think the maturity that we're seeing is the competition amongst the developers, where it's no longer a question of, is soybeans are the best alternative for this? It's how do we compete against other developers that are trying to get this for solar? So in the real estate parlance, we talk about highest and best use for a property. That highest and best use is pretty well realized in most markets across the country now, that solar is becoming the dominant choice. If it's a suitable site for it, landowners are hearing from multiple developers and are able to evaluate that.
So I guess I'm a little curious on the incentives that are out there, and I understand that they vary widely by state. Let's take Florida. I'm assuming we have a lot of sunshine here, but it sounds like we don't have as plentiful as incentives. Could you just give us an idea of what the incentives would be in the state of Florida versus California, which is, a fully matured incentive-laden market?
Yeah. So I don't want to get too far in the weeds. I'm trying to think about the audience here. So if we have in Florida, I think there's a very strong presence of very few utilities in the lobbying effort. So they drive a lot of heavy influence in the legislation for Florida. So FP&L, Duke Power, I think we have the Southern Company is in the Panhandle. But these groups are basically, they've wanted to keep private developers out of the state of Florida. And their bid has been saying, hey, look, we can do this in-house as a utility. We can build these projects. And they've gotten some of these same incentives that private developers have received in other markets. But it's made it cost prohibitive for private developers to come in and compete. So, without getting too much deeper into that, it's a lot to do with how much pressure and ability that these private utilities have in the market. Now, you can't say they haven't done a great job in a lot of ways. Their angle has been, let's build very large projects in concentrated areas, much like they would typically implement power plants. So if you drive past Tallahassee on I-10, you'll see a 650 acre, 75 megawatt project sitting right there. You can't miss it. Looks like a sea of panels. You'll see a lot of these on the interstates. I think there's some going down 75 as well. Whereas if you go to Massachusetts or North Carolina, you might not see these from the road, but there's a whole host of these community gardens, which might be 20 to 40 acres that are owned by private developers and private owners all over the country. So it's been an interesting experiment, kind of a rollout to see which is the best path. And I don't think we know yet. So
interesting. So if I'm understanding correctly, the incentive dollars may not be all that different. It's just the way that the entry point to do it in the state of Florida is much higher than the entry point to do it in the state of Massachusetts or California. Is that right?
Yeah, and I don't think the opportunity is there at all for private developers to get involved in Florida. I mean, there's right now the utilities have pretty well, elbowed them out of the room. So, but in general, the incentives might be, laid out the same way. The utilities are just picking those up as they do their developments. Yeah.
So in rental property investing, we talk about these like cash flow markets, right? Like there's different qualities of, I guess if we rewind it, the idea that you're cash flowing beyond what your regular monthly payment is kind of like the entry point to the game, right? It's like quarterback arm strength. You got to at least be able to throw the 10-yard out, right? And then after, I like my quarterback arm strength.
It's nary a show goes by when we don't talk about the quarterback arm strength being entry to the game.
Right. And then after that, there's different qualities, right? Like there's markets like Birmingham, Alabama, or Cleveland that have a high degree of cash flow, but the properties don't appreciate as quickly, while Jacksonville has a little bit lower cash flow. It's still positive, but the appreciation is huge. And then that means that the longer it goes, the better. Can you give us kind of like a breakdown of what your markets are that you play in? And do they have different characteristics of why the solar investment is better? Like, is it better for one kind of developer versus another based on which market it's in?
It's not so much on the investment side with how they're looking at where to place their dollars. Once these projects are built, they're actually very similar. I mean, it's just solar panels. I mean, you can fit one here and they just build it and stamp it a million times over to put it in a field. And most of these are secured by a long-term power purchase agreement with utility. The useful life of the panels, just like real estate, how long will this building last that we're in? They look at those at around 35 to 40 years. So honestly, that's part of the appeal for these is once you get an operating project, they all look a lot alike. Secured by a utility, backed by a high credit, tenant in a sense. But the real risk is about how early to move into which markets and how to assess that development risk. So large projects might come with higher ticket interconnection costs because you have to build a substation or tie into some of these high tension power lines, which may take more time and might be a bigger risk than saying investing in 5 of these smaller community gardens in a different state. And the arc of the policy risk is something to think about as well. So you can move into a state early when you might have this murmur of a new incentive package that is working its way through the state legislation, or it could be something that's a fully baked program that we know what those incentives are. And so there's an entry point along that curve as well. And so I think those are probably the biggest drivers is the type of projects you're getting into and the timing of when you enter the markets. Because there's probably a good 20 states left that haven't even crossed the edge of really widespread implementation of solar. So there's a long way to go left in the country. Yeah.
Got it. So if I'm hearing you correctly, then it's kind of the risk of the project itself, getting it off the ground for the developer, less so the cash flow numbers and kind of how much money it spits out is a much more uniform thing. It's just kind of like, how likely is this thing to happen in a certain period of time so that you reach that cash flow positivity within the time frame that you have the agreement and set with the landowner? Is that kind of it?
Yeah, that's right.
Perfect. So let's talk about it from the perspective of the landowner. What do landowners expect when they bring a developer onto the land, and what kind of cash flow are they talking about? What kind of ROI are they looking at?
Yeah, so I mean, most of this is not investment driven, so it's really hard to put it's hard to find that entry point of what they had into the land. But if they're looking at it from an ag perspective, I mean, there's very little risk in or cost in signing up one of these options with a developer. They're basically saying, okay, we'll give you 3 years. I'm going to continue farming my property if I'm a landowner anyways. And so, as far as an ongoing investment, if they have some sort of income stream they're collecting, that doesn't need to be disrupted until there's the actual event of the groundbreaking where the project's de-risked anyways. So from a landowner standpoint, it makes a lot of sense if they have some sort of investment on the property already. There are some situations that don't make so much sense, such as like if somebody's really interested in selling the property today, this might encumber that. So the fact that you have a 3-year option that's in place that somebody's, potentially doing something in your property that would change it, you can't sell it to somebody that's trying to build houses on it today. So if anybody, I think where there's some cases where it doesn't make a lot of sense is transition type dirt, which is happening a lot these days of residential development. So if it's moving into a suburban market and it looks like it's well positioned for solar, but in 2 years, this could be sold to single family residential developers. That's probably something, if I'm sitting on that land, I'm going to wait and see and probably sell it for homes.
Yeah, that makes a lot of sense too. That's kind of what I was thinking early on. Who is this best suited for it? Right now land is on fire. Everybody wants land. Everybody wants to build land because there's a shortage of housing out there. It seems like it would work best for those homeowners who have a high priority on keeping the land in their family or however they're holding it. And it's a better alternative. It seems like asset preservation is really important. It would seem like it's just a better cash flow alternative than what else is out there, while not incurring a lot of the risks that you would receive from development yourself, right? You're kind of passing that development risk on to somebody else, right?
Yeah. And one other thing I was thinking that's relatively new this year is the inflation risk. I mean, because we're talking about a long-term fixed cash flow amount. It's like an annuity. The landowners are, more concerned that even though it's an above market rental rate, it used to be a 1% to 2% escalator. Now they're, inflation's 4 or 5%. That's, that investment's moving the wrong way for them. So that's been a difficult thing for the developers and for the landowners to get their arms around, because the developers, on the other hand, entering into a 40-year contract, a 4% escalator could pretty well crash the deal.
Right.
So, that's kind of a new thing that we're grappling with in the industry. So.
As the middleman in that deal, Nathan, how do you solve for that, man? Like, what are you guys thinking? I know that you're probably thought this out a couple of different scenarios. Is this kind of, how do you hedge for that to facilitate these deals to move forward?
Whew, yeah, this is like real time for us. We're in these kind of discussions this week, really. So I think there is enough of a couple things. I mean, one is, if you're looking at the alternatives from a landowner's perspective, if he is thinking about leaving it in agriculture, remember that the value for solar leases is still 3 times higher than that. So it's a strong, compelling pitch on that front. And then if they do want to move in that direction, you're at least competing with other solar developers that are dealing with the same constraints. So, we at least have a game it's new information, but it still should make sense for the landowner. And all of the developers are generally dealing with the same issue on their side for financing. So there's been some limits to how much the landowners can really ask for here. And it's more so, I think we're finding that they're just having to get comfortable with it.
That makes sense. You want to go into a couple, let's shoot through a couple Q&A questions. And then I want to ask you some stuff referring to like smart cities and things like that I'd love to jam on with you. So Lee Bishop, MVP of the community, asks, and by the way, Nathan, if this isn't in your area of expertise, totally fine to punt as well on any of these questions, right? This is just kind of like a run of the mill. We like to get people involved. Sure. And our community always, comes up with interesting angles, right? So Lee asks, there is a program for energy companies to pay for solar panels on individual homes. Is there a plan like that for property to set up solar farms and the landowner gets percentage to have the solar farms installed by the power company? Sounds like it's the developer, right? Like this is kind of not just a top-down program for that, but it's kind of like a public-private partnership, and that's what we're talking about?
Yeah, I might need you to read, if I could read some of these too. I think what they're asking, yeah. So the difference between rooftop and utility is, I mean, certainly as a residential homeowner, you are owning the system, and therefore they can give you incentives to put this on your property because you're owning the asset. I think in this case, Pablo, like you said, the developer is owning the asset. So you're leasing the land back. So any sort of incentives are going to live with whoever owns that asset because he's using that to get the financing, just like you would use that to get the financing for your solar project on your roof. So really those, in any case that I've ever seen, there's never any incentives that are passed through to the landowner for that. That's the whole purpose of the policy, and the programs and the federal tax credits are all driving that development incentives for the developer to build those projects.
Gotcha. I guess Lee's clarifying in the chat. Is the supplemental support by the energy company to help? Is the energy company the one that's pitching in to kind of make this more palatable for the developer and home and landowner?
That's a good question. Oddly enough, no. I mean, they might, FP&L runs a Super Bowl ad and everybody sees a bunch of solar farms and they think they're the great guys that are implementing these things.
Mhm.
I mean, their obligation is to, if it's a private energy company, they're making money on selling energy. And beyond that, their obligation is to, the rate base. I mean, they're trying to provide low cost energy. So those are their primary drivers. I think anything to do with renewables to them has to make financial sense first, and then they can go promote themselves as kind of the good guys. But I don't think you'll find in any of these cases the energy companies are willing to offer anything that's going to compromise their bottom line.
It's interesting, man. Good clarification, Lee. I appreciate that.
Yeah.
Kat Schiffer is asking, are there deals for us to have solar panels on the houses we own outright? How much do you know about rooftop solar that you can kind of give some advice to for Kat?
Not a ton. Just probably high level stuff. But I'm sorry, Pablo. Ask the question one more time for me. I'll take a shot at it.
Yeah, okay, I like to go back. Are there deals for us to have solar panels on the houses we own outright?
Yeah. Don't overcomplicate it. It's a payback equation for you. I think I would look at the same thing on my home. The broader bet for utility companies is they can pass these cost savings through to you by having projects down the street, and you can participate in those just by paying your utility bill and paying your taxes. And we have policy incentives that are happening that way. If it's something where you care a lot about energy reliance and want to have a solar project on your home, it's a payback analysis on how much you're going to save for your power bill over the length of time you're going to have the facility or you're going to have the system. To me personally, I'd have a hard time making those numbers work. And I think that's where the challenge has been. It might be more appealing, and there's some interesting financing these days by some of these rooftop installers. But I think that's kind of the equation. It's really more of a personal choice in your financial picture.
Yeah, I'll just kind of add on to it. We don't have a tremendous amount of knowledge or expertise in the area, but we started to ask these questions for our rental property portfolio and for the portfolios for our clients, just like Kath. Because, as a overall market right now, we are seeing that prices are going up, interest rates are going up. We expect that to be happening in future years, and that's really going to compress cash flows. It's going to make them smaller. And so in an effort to continue to have positive cash flows, we're looking at all angles. And so a few years ago, we looked into this. We ended up not moving forward on it on our own portfolio. You would think, though, for our owners of rental properties, they buy and hold for a very long time. So the payback window for them would be longer because they are planning on holding on for a full market cycle. So there would be probably a better chance of it happening. And I can't remember exactly the details why we decided not to move forward on it for our own portfolio. But, it's certainly something that we're continuing to monitor. It's one of those things we're all, as investors, going to have to figure out new and better ways, disruptive ways in the construction industry, in the utilities industry, to be able to preserve cash flows as they diminish over the years. And the cool thing with JWB clients is that, JWB owns over 300 rental properties ourselves. And you guys have seen this over and over again. Before we roll something out to our client base and ask them to invest in something, we have this awesome portfolio that can be our guinea pig, and we can test it out ourselves. So if we decide to make that move, if we see value potentially for our clients, we're going to do it on our own properties ahead of time, share the results with you guys. And who knows, maybe this is something that could preserve cash flows for all of us sometime in the future.
Greg, that's an interesting point. I mean, so do you guys, I assume your tenants in your properties are paying their own utility bills, right?
Yes.
Okay. And that was part of the challenge we had. So there's a whole industry called commercial and industrial solar as well, which is basically what you're talking about, rooftop for industrial properties and commercial. So looked at, there's markets where there's, shopping center rooftops, which would be great for solar panels. And it was always a challenge to get the owner of the shopping center interested, because he was passing through those utility bills anyways to his tenants. And so whatever cost savings would really require him to rethink how he's dealing with his property and taking responsibility for their energy, which was never his business anyways. So it just seemed like it was a structural disconnect for how to implement rooftop solar and pass it through if the tenants are ultimately paying the power bill anyways.
Yeah. And I see that point. I think for myself as a rental property owner, if I could decrease the cost of utilities for my residents in my house, but the market is still for them to be paying a certain rent rate plus utilities, if that's what they're expecting, then in essence, I could charge more rent over time. Right.
Yeah.
If it was a long enough payback and the investment up front was not cost prohibitive, then it may make sense. Which is where we were going. And like I said, I don't know, I should probably talk to my team about it a little bit more, dust off the ideas there. It's the best thing about the show and having guests on like Nathan, right? Think about old ideas. I know it didn't work a few years ago, but lots changed in the world in the last few years. Maybe we'll dust it off and see if we can do something there.
Yeah.
Nathan, you mentioned some of the creative financing options, right? Like I know a little bit about this from a past life. Are you talking about like the PACE programs where they finance the cost of installation of the solar panel, but attach it to the property taxes? Have you heard of that mechanism?
I haven't.
Okay.
I'm not sure about it. And again, we're talking about the rooftop financing.
Yeah, it's rooftop financing. They did it for commercial.
Oh,
and
they
did it for residential. And if I remember correctly, right, I haven't been in that world in probably about like 5 years, but there was some kind of way where you'd get financing at a whatever interest rate that was pretty attractive, and the collateral was just the gain in energy efficiency, right? So you didn't have to put any kind of money down into it, and the loan was secured by the increase in energy efficiency, and it was attached to the property deed or something like that, right? Like it didn't move when it didn't follow you if you were to sell the property. Are you familiar with any of that stuff at all?
I'm not. I mean,
Okay.
that's really. I mean, this is just a pure financial instrument somebody's coming up with to have that. I mean, it's cost whatever money it is to put the solar panel on your roof, and that's the facility that they're financing. So, I don't know. I'm sure these days. There's a very creative people out there with financing that are trying to find way to make things stretch out for a very long time too. And
financial engineers like GC over here. All right, this seems to be way more in your wheelhouse here. Nadim's got a question. What is the smallest parcel one can have for a solar project? How soon does the lease payment start once the lease is signed? For one has to wait till the project is completed and it starts generating power. And how's the payment calculated, by acreage or by square footage? So what's the smallest kind of like size that you find this thing viable? How quickly does it go from the moment that you sign up? And then, how do you calculate kind of payments by square footage?
So these are right in our wheelhouse, hopefully. The smallest project is usually 1 megawatt. Sometimes they go a little bit smaller than that, but a megawatt is a million watts, and they're measured in kilowatt hours. And those are typically on about 6 to 7 acres. So you can usually do about 6 to 7 acres for 1 megawatt. And I think the reason that's probably on the low end is because when it comes to utility scale, there is an interconnection risk that the developer has to take on. And there really has to be enough of an upside. And they get that through project efficiencies and size, where if it gets much smaller than that, it's difficult to really build a strong portfolio and get financing for these projects in institutional markets. So maybe down to slightly smaller than that, but about 6 to 7 acres in viable community solar markets. Yeah. And so the next question was, I believe, around when the rent begins.
How quickly the cash flow, I think, is kind of the question.
Yeah. So the developers will pay a premium for the time, which is not that significant. Usually that ranges from $5,000 to $10,000 per year on the high side for large scale projects that are 300, 400, 500 acres. Sometimes they'll be willing to put 20, 30, 40 grand a year at risk, but not a huge amount in the scheme of things. Most of the times the rent is going to begin when the project breaks ground. So when they install, they're ready to begin construction, the project is fully de-risked, they'll begin paying rent, which it coincides with the time they take possession of the land as well. So for everything else they're doing in the background, and that usually takes anywhere from 2 to 5 years.
Okay, that makes sense.
And
So I take up some notes here. Did you have follow-up or was that for the design scorecard conversation later?
Just taking notes. Like I hope everybody is. I've got all these notes. I'm like, man, I bring half the stuff that we talk about in the show back to my business partners. I'm like, what do you guys think about this? What do you guys think about this? No, this is purely for me.
Yeah, and then what was the other thing? They're usually calculated on per acre, per usable acre. So that's the metric, and anywhere between 800 to somewhere in the Northeast, they go up to $4,000 an acre a year for what they can pay for the land, and it's calculated on an acreage basis.
Good stuff. I got one more question, and then I'm gonna change gears a little bit. But we got a recurring guest of the show here, all the way from France. Anonymous Attendee asks the question: what type of land typically is best for these solar farms? Topology and number of acres. Sounds like an educated solar person.
And that's a very big deal. And I didn't know this when I got into the solar project, but the topography of the land is the slope level. And funny enough, I mean, if you have I guess undulating, or what you'd say a mountainous or rolling hills, that affects how much sunlight these panels can receive. And so the more slope you have on a property, the more you have to spread the panels out, and the less efficiency you can get out of the land. So flat is better. Anything southward facing, this was the other thing. It's if a hill is facing to the south, you can actually put the panels on it and you're still going to pick up the sun, of course, anywhere, because we're in the northern hemisphere, you still get the sunlight coming in from the south. So that was interesting as well. But the other factors would be wetlands, to tell you the truth. Probably the other biggest thing is floodplains and wetlands. If they're sitting in a floodplain, water and electricity is bad, of course, and one of the biggest risks they can run is the flooding of these farms, and getting insurance in a floodplain is expensive. So floodplain is a no-no, and any sort of jurisdictional wetlands, just like anything else for development, you can't put solar projects there either. So those are two big ones.
That'd be cool if we could find a use for wetlands from a development standpoint. When we're evaluating a piece of land to buy, if it's wet, right, you basically chunk off that value as not being developable. And I don't really know if there's much value there, and maybe somebody in the chat knows more than I do. I'm not the closest to the development side, but
yeah,
wetlands, I mean, there's just not much to do there.
And I apologize. I think I missed the easiest one is just the proximity to the grid too. I mean, obviously the interconnection is huge. So substations, which I don't know if anybody caught, I was watching CBS last night. They had a nice little piece on substations and the vulnerability of our grid, given the situation with Russia that we're in right now. And it was an interesting piece that I don't know if this is validated, but they said, there's only a handful of substations in the country that could potentially impact the power grid if it was ever attacked. So I think if that is the case, the substations are really the key drivers in any sort of interconnection, because they bring the power, they step it up or bring it down to voltages that bring it out to people's homes. So those are the key points if you're going to build a solar project, to be close to one of those.
Interesting. Cool. Yeah, that subject of energy independence and investing in these like critical needs and stores of value and safe havens is definitely something that we all have on our mind with what's happening in the Ukraine and Russia and whatnot. Nathan, how do you, switching gears completely, do you yourself invest in real estate? Do you have any kind of questions as far as real estate investing, either in Jacksonville or abroad or anything like that you've been tinkering around with from a personal level?
Oh, so it's interesting because we work with developers all the time. I mean, these are our clients. Maybe it's just a risk preference, but we have a service business. We make money when they do well on projects. I laugh. I think about the movie The Big Short. If you ever remember Ryan Gosling's characters, and he's like, listen, you're going to get the full sundae. I'm just going to get the cherry. And I think that's our business. So we take a lot of cherries and we do all right. But I view, our personal investments very differently and very vanilla, to tell you the truth. I mean, most of our investments have fed right back into this business of ours. So we're just getting to the point where we've realized enough success where we have the potential to start looking at some rental properties like JWB. But I'm actually a novice with that. So this is interesting for me to look at, buying some houses, being part of some rental properties around Jacksonville. So I love what you guys are doing too.
Well, that's really cool, because I feel like I'm the dumbest guy in the room when we're talking about solar, right? We're talking about substations, and I'm like, I don't even know what a substation is. So, well, that's great, man. Well, you're in the perfect company, right? A lot of our investors here that are listening in now in Zoom or in the podcast are right there with you. So I hope that you continue to come back, and, you can always talk to me and Pablo and the community here and learn a little bit more about it. But, I'm always thinking about, because when I think about your business, right, it's a real estate brokerage that helps a very unique set of individuals, which is really cool, by the way. Kudos to you for understanding this niche, this market, and then, creating a business to serve that. I guess I was wondering about the recurring revenue within, like, opportunities within solar contracts. Like, for example, in the commercial space, right? Commercial lease brokers have a much bigger upside because they get a piece of the length of the lease that they sign. And that's a very lucrative business model, right? Mm-hmm. If I think about JWB, right, we sell the asset, but we also continue to do the long-term management. And that's really important for the health of our business, to have that stable kind of annuity income continuing to come in from, 4,300, 4,400 homes that we manage. I guess I'm curious from your business perspective, is there that same opportunity for brokering solar contracts in this space, to where recurring revenue is a part of the business model?
Yeah. So, that really came up with the question when we started getting into this: how do we get paid? Which, from a commercial leasing standpoint, you're usually getting paid from your landlord. So they're willing to, because they can, finance the tenant improvements, and they're looking at the long-term lease, and they have a financing already. They're comfortable paying a pretty hefty chunk up front to brokers that will bring them a good tenant.
Right.
You imagine for solar, we don't have landowners like that. These landowners have no money, and they're talking about, a long-term income stream. And we don't necessarily have the appetite to sit around for 20 years and collect rent checks with them either.
Right.
Portion of that's not really interesting. So we've been forced to collect our fees from the project costs that mm-hmm. are more on the development side. Mm-hmm. One opportunity that is worth taking a look at, and there's more of this happening, is there's a secondary market emerging for people to buy land with solar projects already on it. So if you buy, you're effectively buying just a piece of real estate with an ongoing investment that's coming in. It's a very simple investment, and it's basically, you're collecting rent, you're taking the place of this landowner. Mm-hmm. And he might want to sell it, and they're trading at a pretty, a pretty standard cap rate out in the marketplace. And there's becoming pools of investors that are putting together groups that are pushing these cap rates down, and they're becoming, sub 4 or 5% return. So it's difficult for a Main Street investor to really find the interest in that. And the value is really in pooling it. Yeah. But as far as an entry point, if somebody's looking to find one of these that it fits their model, those can be picked off. And so I think as you look for solar projects in your markets, in your areas, there's usually a landowner on the other side of that's collecting a rent check that might be interested in selling. And that's something that might be an entry point for smaller investors. Yeah.
And it seems like, there's such a high priority for the landowners to hold on to the asset, and the opportunity cost of that is that they could sell this asset at a really low cap rate, which is a high purchase price. Right. For that end investor. How many of your landowners are open and willing to doing that? Do you take people through the process of collecting better, call it rent checks for the solar development, and then do you take them to packaging this thing up and then potentially selling it at a low cap to somebody else?
And that's what we're trying to figure out now is how many landowners, why wouldn't they have just done this in the beginning?
Right.
Purchase options they could have entered into as well. So there's not a ton of them. put it in your seat as an investor, they're probably sitting in the same place. Hey, I like my rent check. I don't have to pay, some major capital gains tax to sell the property. And just feels good to have this coming in because I didn't really have any basis in this land anyway. So it is challenging to find a real motivated seller, but they are out there.
Yeah, interesting.
Interesting, man. I saw you taking notes on the category. I keep calling it the category design scorecard, on the investing scorecard. Do you want to kind of like run through what you learned and pick Nathan's brain about it, or?
Well, sure. I think this is a little bit of a nuanced type of kind of investment scorecard, to be quite honest, because, the thought of one of our investors going out there and acquiring at a minimum 6 to 7 acres, but probably more in like the 30-acre range to 50-acre range, it seems like is kind of more of a normal deal. The thought of doing that to earn a small amount of a cash on cash or a cap rate there, a return on investment, just doesn't seem to make a whole lot of sense from the way I'm seeing it. Nathan, do you think I'm off there? Like, do you see anybody targeting large tracts of land and saying, okay, cool, I'm going to go in and start to enter into these land deals? Or is it more of like kind of like what we were talking about? It happens to be there and we're finding incremental growth as far as the rental income coming in. Is that more likely?
It is. And honestly, it reminds me a bit of your business, right? I mean, there's a reason that somebody's not going out and buying houses right now easily and renting them. I mean, you're providing a vehicle that makes that easier, and it gives them the ability to have some sort of fractional interest in these things. It's a more liquid investment. I mean, those make a lot of sense. And in fact, that's how the development community for solar is working too, is you have these big investors and, institutional developers that are coming in and, developing a whole portfolio of these projects, and they're making money on the management of these as well. So their returns on development may not even be that high, but they're making money on the asset because they're continuing to do the asset management for collecting paying the collecting checks from the utility and, servicing the maintenance of the farms and those kinds of things. So it's interesting, but the ones that are making money, it's usually a longer look at these than just a quick turn on the project. So
and who knows in the future if, as incentive dollars may be getting more and more plentiful in the future, that all shuffles down to the developer being able to make more money. And then that would shuffle down to higher lease terms for that landowner and might make it more attractive. I was just kind of running the numbers here. Nathan, tell me if I'm kind of understanding this a little bit as from like a cap rate perspective. But I heard you say that, depending on different parts of the country, but $1,000 a year is per acre is what this might bring in terms of rental income, if I call it that. Is that about right?
Yeah.
Okay. And then, the reason that I was saying I don't think it's likely that any of us would go out there and target a piece of land to do this is because with that same targeted land, you could make a much better return on investment, either by selling that land to become houses to a developer, or by, but you could take that same amount of money that you would invest and earn a higher yield than what you would potentially earn if you went down solar. So just to put the numbers to it, right? If we've got, an acre of land, we'll call it about 8 single family houses go on that acre of land. It sounds like these are going to be in rural communities mainly. So your cost of land is low there. I don't know what it would cost, but if I said that it was $5,000 an acre, then if I was going to buy 30 acres, that's $1.5 million as an investment to get there. Right. And then if I'm earning $30,000 that year on that investment, just on me acquiring the land, your yield, your cap rate is about a 2% cap rate. If I use those numbers there, right? If you're looking at other alternatives, it is quite easy for you to earn a 5% cap rate on JWB assets or somewhere around there in the space. Is usually pretty easy to achieve. So the alternative, for somebody to go and target this land to do that, to earn a 2% cap rate, to me doesn't make a whole lot of financial sense. And that's probably why Nathan is saying, listen, it's really not there to go and target this, to go into this and start, planning to do this type of development. However, if you are an asset, if you own this land and you're earning a third of that by using it for agricultural purposes, Well, Nathan's team can help you multiply your current earnings by 3 times without additional risk, without additional hassle. And that's really where I would think that this play makes a ton of sense for somebody that owns land, does not want to sell it anytime soon, is not worried about it being encumbered. And then you can make 3 times what you're currently earning. Did I encompass that pretty well, Nathan?
Yeah, I mean, the only thing I'd add to that is, you're right. If you ever had the potential to sell to a developer for residential, you would always take that option.
Mm-hmm.
So these are all properties that would not qualify for that. They're too far
Mhm.
out. Maybe utilities aren't there yet, but if residential development was an option, you'd probably take that all day over solar. And honestly, I spend a lot of time with people telling them why this is not an option for them, which is fine with me. I mean, it's good. I feel like it's an education, because a lot of Main Street investors are trying to find their way into the solar market, and the land and the utility side thing, it's a challenging entry point with that. So, I think the secondary market for the infrastructure to buy the land outright might be a unique play, but the biggest challenge is not necessarily the returns, is the development risk. I mean, you're dealing with residential rental properties that never have a 1 or 0 effect. I mean, you're going to do good or bad with the property, but you're always going to have a property that you can turn around and sell. Right now, if you're buying land and you think you're buying it for solar and it doesn't turn into solar, you're dealing with just land again, and it's a very different investment than an income producing property over time. So
Great breakdown, fellas.
Yeah.
Good stuff. Nathan, we are up on an hour, man. I want to be respectful of your time. Really appreciate you doing this with us. We got really quick yes/no questions from a couple members in the community that have local questions. Are you familiar with PG&E, SoCal Edison, San Diego, and lobbying for the PUC to reduce homeowner overproduction rates? And do you know if that's passed? Just a quick yes or no.
no. Interesting. I know some of those keywords, but I'm gonna say no.
Okay, got it. Do you work with Baltimore Gas and Electric, or do you do business in Maryland? Do you guys do business in Maryland? All right, Lee, he does business in Maryland. And then Roger VoiceNet wants to know if you have worked with Apex Clean Energy, which is HQ there in Charlottesville, Virginia. Are you doing any work in Virginia?
I know Apex. We have not worked with them. Yes, and no, right?
Got it. Yeah. Good stuff. Nathan, if
we might like to. So yes, for whoever that was, reach out to me.
Yeah, Roger VoiceNet. So Nathan, what is the best way to connect with you? Do you want people to follow you on LinkedIn? Is it an email? What's the best kind of like follow up if somebody just wants you as their solar expert?
Either one, LinkedIn, email. I have a team that can quickly qualify properties. If you have a piece of property that you think might make sense based on what we talked about, send it to us. We'll run it through our traps and tell you what we think. Anything else related, shoot me an email and I'll get back to you, or we'll get it to the right place.
We just had it shared in the chat. Fabrick with a C, NFABRICK at nationallandrealty.com. Man, this was super educational. I am a avid environmentalist that comes from the green building world. So, like having this stuff collide for me is always a real treat, Nathan. You know that I'm a really, really big fan of you and what you're doing and facilitating this type of stuff. So really want to thank you about that. Want to thank the community. We had over 40 people still here an hour later. It never goes beyond notice that you take an hour out of your day on a Tuesday to hang out with us. The questions drive the show. I'm sorry I didn't get to all of them. The conversation was just too fascinating. Really, really appreciate it. And if you're on the podcast, don't forget, join us live. It's as fun as it sounds. You can be one of you can be the next Lee MVP if you join us live. You're gonna have to fight Lee for it, but it's gonna be a lot of fun. NYAIS.com. GC, I'll kind of give you last words here and let Nathan send us away.
Nathan, I'm just digging this entire show. It's just really fun. I can feel my mind expanding every time we have you and one of our esteemed guests sitting here and talking about things that I have no clue about. And I love being the dumbest guy in the room, and you made that very easy today. So thank you so much for spending the time here and for really just kind of enlightening our audience, man. We appreciate you.
Oh, it was my pleasure. Had a great time, guys. Thanks for having me.
All right. I will see you on Thursday for the JWB Rental Property of the Week.
Week.
Until then, do not be an average investor.